What happens to a second mortgage in a divorce? When a couple decides to divorce, one of the many questions that arise is what happens to a second mortgage. This can be a complex issue, especially when it comes to dividing property and debts. A second mortgage is a loan that uses the equity in a home as collateral. It is secured by the same property as the primary mortgage but typically comes with a higher interest rate. Understanding how this debt is handled during a divorce is essential for both parties involved. First, it is important to recognize that debts incurred during the marriage are usually considered marital debts. This means that both spouses may be responsible for the second mortgage, regardless of who originally took it out. The division of debt in a divorce can vary depending on the laws of the jurisdiction. There are two main systems: community property and equitable distribution. In community property states, debts incurred during the marriage are typically split equally between the spouses. On the other hand, in equitable distribution states, debts are divided based on fairness. Factors such as who incurred the debt and each spouse's financial contributions are taken into account. When it comes to handling a second mortgage during divorce, several steps are usually involved. First, both parties should assess the outstanding balance of the second mortgage. Next, they need to determine who will retain ownership of the property or how the equity will be divided. This is crucial because it affects who will be responsible for paying the second mortgage. There are several options for resolving the situation. One option is to sell the property. The proceeds from the sale can be used to pay off both the primary and second mortgages. Another option is for one spouse to buy out the other's share of the property, assuming responsibility for both mortgages. Refinancing the property is also a possibility. This can consolidate debts or remove one spouse from the mortgage obligations. It is also important to consider the impact on credit scores. Both spouses should be aware of how their credit might be affected by the division of debts. Any agreements made regarding the second mortgage should be documented in the divorce settlement. This helps avoid future disputes and ensures clarity for both parties. In summary, handling a second mortgage during a divorce involves careful consideration of ownership, debt division, and payment responsibilities. The specific laws of the jurisdiction and the couple's financial situation will guide these decisions. Understanding these factors can help both parties navigate the process more smoothly.